Since 1972, the McIlvaney Financial Group has been a conservative, contrarian investment firm. With that mindset, they have created a multifaceted approach to portfolio management, offering a wide array of services including wealth management, a unique short fund, hedging through precious metals, and excellent educational resources. We have had David McIlvaney on our show multiple times because we respect his outlook, viewpoints, and recommendations. You really need to let them give you a much better understanding of what true portfolio diversification is. Just go to McIlvaney.com/Main Street, with Main Street all spelled out, to get introduced and to garner free information. Again, that's McIlvaney.com/Main Street to schedule your free 20-minute consulting session. Hi, everyone. This is Jason Barrick of Wall Street from Main Street. Welcome back to another Wall Street from Main Street podcast interview. Today's special guest is a returning guest. He's worked in the investment community since 1984. He's a founding president of First Quantum Minerals. He's president and CEO of First Majestic Silver, and he's chairman of First Mining Finance. Keith Neumeyer, thank you for joining me again.
Well, great to talk to you, Jason.
Now, Keith, I want to ask you about the sentiment in the silver market. I've gotten messages and comments from a lot of people the last month or two. We may be reaching a capitulation point. Do you think the sentiment for silver is at all-time lows?
Well, it definitely was back in 2015 when I was putting First Mining together, and that's why I put the company together, because the sentiments were just such a low state. Everyone hated mining, and the valuations were just at such ridiculous levels. And today it's a little bit different. We're mid 2017. We started 2016 off with, well, actually the low of silver was January 2016 at 1330, and that's I remember First Majestic was down 20% in the month of January 2016, and everyone was thinking, oh my God, like 2015 was pretty bad, and is 2016 going to be worse? And all of a sudden, you just turned around, as everyone knows, and First Majestic was up 500%, and First Mining was up 300%, and the whole world just changed. And sure, today, First Majestic is down 50%, and First Mining down about 50%, from their highs achieved in the summer of 2016, but they've not gone all the way back to where they were at the bottoms in late 2015 and early 2016. So, there is a lot of money coming into the sector right now. We don't really see it because the stocks aren't going up, but the stocks are going through an accumulation phase right now, and there's smart money accumulating these miners, and that's been going on for the last couple of months, and I think it's extremely exciting what's changing in the marketplace.
Those are good points you make. I think there's a divergence here going on between the retail money, which I think retail is basically giving up on gold, silver, and mining shares. And you highlighted how it looks like institutional money and hedge funds still think this is a bargain compared to a lot of other asset classes.
Yeah, I think, last year a lot of the guys got caught short, and a lot of that rally that took place in mid-2016 was short covering, and then they've now pretty well, a lot of them have covered their positions now, and a lot of them are now going long, and I think that's very positive for the next year or two. And you're right, the retail guys are pretty discouraged. A lot of them came in on that big run in the middle of 2016 and got their head handed to them. People were buying First Majestic at $20 a share, and it's trading at $9 today, and that's pretty tough to take for a retail investor, and they get quite discouraged. Yet it's very common to see people chase markets when they're going up, and sell markets when they're going down. And in the mining sector, you got to do the exact opposite. You've got to pick your timing, of course, and but when a mining stock or phase within the mining sector is flatlining for a long period of time, that's accumulation phase, and that's a good time to be looking at coming into the sector, particularly when you have such a positive backdrop. Silver's not $20, but silver at $17.50, we're doing okay. First Majestic's making money, and gold's $12.70, $12.90 today. That's not a bad price, and that's a good environment for the mining sector. The mining sector can make profits at current metal prices, and this is something the retail investor, doesn't really clearly think through. They get caught up on the movement of the share price, based on sentiment, but yet they don't look at the underlying business itself. And the mining sector has spent the last 5 years, making themselves healthy, reducing costs, learning how to make profits in the current environment. And for the most part, the mining sector has done a pretty good job.
Those are very interesting points. Yeah, the retail people I talk to, a lot of them I think have capitulated, and they've now gone into chasing Bitcoin, Ethereum, a lot of these other altcoins higher. But the silver market, gold and silver miners, like you said, they had their big up move last year. They've had a correction. They are consolidating. It's accumulation. It's a quiet period now. It's not really the right time to sell markets in a quiet period. It's the time to be accumulating, because I still see, the fundamentals of the global economy. I haven't seen really anything improve in the debt situation, or with all these global central banks not wanting to create more easy money and credit.
Yeah, the cryptocurrencies are interesting. I've not made an investment in the cryptocurrencies. I just don't trust them. I don't like, electronic currencies. I like to have cash in my pocket. I like to have gold and silver, in my possession. And then my risk money goes into, the mining stocks. Most of my net worth is in First Majestic and First Mining, and I like it that way. So I've got, though my investments in those two companies, plus of course some other miners I own as well. But and then cash and then gold and silver. To get into the cryptocurrencies, it's like buying a mining stock. And I wonder why would I do that? And if the internet ever went down, God forbid, and we went into a banking crisis or something along those lines, and then all of a sudden you're not going to be able to spend your Bitcoin, and that's what I'm really concerned with. I'd rather have some dollars in my jeans and some gold and silver at my disposal.
Yeah, I've speculated in Bitcoin and Ethereum. I'm still holding my Bitcoin, but I sold my Ethereum. I bought it last year, and I sold it about a month ago. But I want to transition now and ask you about the Silver Institute report that came out in May. This was the first time in more than 14 years that annual global silver supply was down. First time since 2002. Why do you think that was the case?
Well, it's lack of investment and lower grades. First Majestic. I've been on the road. Well, I'm constantly on the road talking about First Majestic, and our shareholders or our investors know that 3 of our 6 mines actually produced less silver in 2015 and 2016 than they did in 2014 and 2013. So we've had 2 years of reduced production at 3 of our mines, and it's a direct relationship to investment in development and exploration, and that results in lower grades and lower throughputs. And that will reverse itself. At least in our case, First Majestic is a fairly unique company because we do have 6 silver mines that are predominantly silver, and we know there's higher grades there within the structures and so on. It's just to cost money to get to them and develop them and bring the ore to surface and get that ore into the mill and so on. And there's usually a delay of about 12 to 18 months from the time you make that investment to the time you can actually start to see increased production. So we're hopeful that the 3 mines that have suffered from the lack of investment over the last few years will start to revert back to their normal throughput levels and production levels. But in the case of other companies, there's really not any big mines that are coming onto production over the next several years. And a lot of the silver comes from byproducts, and as your listeners probably are aware, the 70% of silver comes from other types of mines, like lead mines, zinc mines, and so on. And that whole industry has been decimated due to low metal prices. And things are looking a little bit better, but there's a lot of shutdowns that occurred over the last couple of years, and that's had a direct impact on silver supply.
Yeah, you guys, First Majestic Silver is producing silver at under $13 an ounce, which is very impressive. You're one of the lowest cost primary silver producers in the world. But I know there's a lot of other primary silver miners that are, they're only making $1 or $2 an ounce margin. Keith, I don't see how they can replace their reserves for, all the reserves they mined during the bear market at current silver prices.
Well, you're saying $1. Well, in a lot of cases, a lot of the smaller producers, I'm talking about the actual, pure silver producers, are producing silver at north of $20 an ounce, and they're losing money on every single ounce of silver they're selling, and then they go to the market and raise capital through private placements just to continually produce silver at a loss, which is a crazy business plan. But there's several mining companies out there that are actually doing that, and I'm not quite sure why investors invest in companies like that, but nevertheless, it's not my business. But, you're right. Reinvesting capital in mining. Mining is a very capital-intensive business, and it requires continual investment to develop underground infrastructure. Most of these mines are underground mines, so you have to build tunnels, and miles of tunnels underground at a very expensive cost to get access to all this mineral-rich rock or ore. And then you got to bring it to surface, crush it all, throw it in a chemical process to extract all the metals, and I can tell you it's an expensive, laborious process. And if the mining sector is not making, or if the mining company, is not making enough of a margin, they just can't make that investment to do that necessary underground infrastructural work to get access to the ore. And either the costs go through the roof or they just shut down the mine.
Do you think the primary silver miners, companies maybe other than First Majestic Silver, or you can include your company in there, do you think if the silver price were to maybe temporarily fall for a couple quarters, a couple dollars an ounce lower, is there a couple dollar an ounce lower cost to cut in the industry? Or do you think the industry during the bear market since 2011 has basically cut almost all the costs that can be cut?
Well, I put First Majestic together when silver was trading at $5, and we started producing our first ounce of silver when silver was trading at $7, and when we made, we were making money. We weren't a big producer, but we were doing okay, and as time evolved, we obviously became a much larger producer, and then as the metal price increased, the costs increased, and as the oil price increased, the costs increased. So there's several drivers that drive our costs, and one is other commodities, because we do consume oil and gas and other chemicals and reagents to extract the silver from the rock and so on. There's a lot of chemicals that we need to purchase, and a lot of these chemicals are based on the oil price. So the fact that the oil price has dropped so substantially, that's been great for us, and it's been great for the mining sector. The other things that drive costs is people. Right now, there's been a lot of, in the last 4 or 5 years, there's been a lot of layoffs in the industry. Our workforce has dropped to about 3,700 people compared to about 5,500 people back at the peak in 2012. And then we're actually producing more silver today than we did back then. So we're much more efficient today. So my point is that there's a lot of people available. If you need drill programs, if you need, big underground tunnels developed, there's a lot of talent, there's a lot of people available right away. If you need 100 workers, you snap your fingers and they'll be there, at your doorstep. But our cost per meter right now, drilling, is about $65 a meter. That compares to about $120 a meter, so about 50% reduction. 5 years ago, our cost to develop 1 meter of underground infrastructure or 1 meter of tunneling back 5 years ago would cost us about $1,600, and today that's about $900. So, I think it's going to be a long time before we see costs go up to where they were, and they may never get. As far as I'm concerned, with all the automation and all the improvements that we've made as a company and the whole mining sector has made as a business, I don't think we're going to get back into a situation where we allow, as an industry, the cost to get so out of whack as they did previously in the last run. Then I'm also not a bull on oil. I think oil prices are going lower versus higher, and that's a big driver to costs.
Those are excellent examples for the listeners. In terms of high grading, I've heard from a lot of other experts I've interviewed, whether they're mining stock newsletter writers or other executives like yourself that a lot of mining companies, whether they're primary gold or primary silver miners in the industry, have done high grading in order to survive. Do you think long term that will also cause the costs of the miners to rise a lot faster when the metals prices rise too?
I can't really speak to the industry because I haven't specifically seen that. I've heard people say that, but I've not looked at someone's news release or financial statements to actually witness a mining company high grading their mine. It may be happening, or it may have happened over the low metal price period. In the case of First Majestic, it didn't happen. Actually, in our case, we couldn't have high graded because we weren't spending the development to get into the high grade areas. We have drilling, 2 kilometers ahead of current mining activity that we've hit, nice, medium to high grade intersections, or at least much higher areas within the underground mine that are higher grade than the current areas that we're mining. But it costs you money to develop that 2-kilometer tunnel. So we elected not to do that investment. We elected to just follow the current structure and mine what we can mine. And what happened over the last 3 to 4 years is the grades have actually been slowly reducing at First Majestic's mines. And what we did to compensate, because obviously we didn't want to be producing ounces unprofitably, we decided to lay people off, which is an unfortunate thing. But of course, it's a business after all. We had to make that difficult decision, and also reduce throughput. So those two combinations assisted us in turning profitable in 2015, and then that's what really turned the whole ship around for us as a business.
I want to transition now and ask you about specifically working in Mexico, since you've been there for years now. President Trump has talked about potentially putting a VAT tax on imported Mexican items, including maybe silver. What's your opinion? Do you think Trump will actually follow through on this?
Well, precious metals, I've not heard that he's referred to precious metals in his verbiage regarding taxing imports from various countries, China and Mexico, 2 specific countries he's obviously mentioned in the press. I think he's more looking at the auto industry, the airline industry, electronic industries where the United States has lost jobs to either Mexico or China, and it's in an attempt to regain those jobs. He's wanting to put a tax on some of these imported products that he would like to see manufactured in the United States. And I think that's the basis of his argument. In the case of gold and silver, it's not a product that could be produced in the United States because it's mined, obviously. So eliminating or restricting the flow of precious metals in the U.S. would actually hurt the United States because, silver coins, for example, the Silver Eagle, and also the entire electronics industry in the U.S. Requires silver, and without silver, it would be a big problem for the entire supply chain. So I don't know. Who knows what's going to happen? It's probably not even worth speculating, but I've not heard anything regarding taxing of precious metals coming to the U.S.
Yeah, it looks like he just wants to go after some of the more heavier industries. Now, the Mexican government has raised taxes on gold and silver miners in the last couple of years. Do you think as more problems emerge with their oil company, are you worried that the Mexican government will continue to increase taxes on mining companies?
Yeah, well, there's the one increase only. When the new government was elected in 2012, they brought in a new tax. They right across the board, they went from up to 35% tax for individuals, and they went from 29 to 30% tax for corporations. That was right across the board. In the case of mining, they launched a 7.5% tax on mining based on EBITDA. So it's based on your earnings. So it's really about half that number. And then they also have a 0.5% royalty on precious metal leaving the country, 0.5%. So it doesn't really add up to a whole bunch, but it is obviously extra. The approximate tax rate for us is about 33 to 35% in Mexico on a combined basis. So it's about equal to most of the other countries around the world. Prior to their change in 2014, you could probably call Mexico a lower tax jurisdiction. Now they're right in the middle with the rest of the OECD members.
That's very interesting. Thanks for sharing. Yeah, I was one of the things about mining companies, there's always geopolitical risk with them, because whenever a new politician comes into power, it seems like they want to go after the assets in the country. Unfortunately, this is like the new normal we're in. Mexico doesn't seem to be too bad, though, compared to some of these other countries that try to, I know there's problems right now in Tanzania with the new gold miners over there.
Yeah, the connection between Canada and Mexico is pretty important to both countries. There's a ton of trade that goes between Mexico and Canada, and I don't think either country wants to, cause any ripples, to corporations that are moving product back and forth between the two countries. And of course, the United States is a big player as well. The U.S. is Canada is the largest exporter to the U.S. and Mexico's, the largest importer of Mexican products is the United States, and the largest importer of U.S. or Canadian products is the United States. So the United States is a key component to both U.S. and Mexico, Mexico and Canada. But my point is the relationship between the three countries is pretty entrenched, and I don't think the politicians really want to rattle cages too much. I know that Trump was talking about NAFTA and maybe rewriting some clauses in NAFTA, or he said a couple of times eliminating NAFTA, but I don't know. I have my doubts, because it's a pretty important treaty and it took a long time to put in place. It's been in place since 1993, and it's been good for all three countries. He could say it's been harmful, but quite honestly, I think it's been good for all three countries, and I don't personally think it's going to be taken down. It may be modified to some degree, but it's not going to affect the metal sector anyways.
Yeah, I think Trump has backed off his NAFTA, eliminating NAFTA lately. I want to transition now to Deutsche Bank. They admitted that they manipulated and named co-conspirator banks in manipulating the London Gold Fix and London Silver Fix. Last week, we had one of the traders plead guilty and start to, testify. Is the class action lawsuit you've spoken of in the past, is that progressing?
I haven't spoken to the lawyers in the last month or so, and then based on the recent news, I've got it on my list of things to do to put a call into them, but to see where exactly it's sitting. But I think it's, I was reading Ted Butler just this morning, and he's shocked. Well, I actually read it yesterday, and then it came out again this morning on Ed Steer's morning note. But it's interesting that even Ted Butler's surprised that the CFTC has taken the position that they took with this particular trader, and that the guy's pled guilty. So I think that's fantastic, and he's actually going to be cooperating with the regulators to educate the regulators on how the manipulation occurs, and possibly implicating other players that are doing the same things that he was convicted of. So, we could be seeing a sea change in this whole manipulation scheme that's been going on for the last 20 years.
Yeah, it's just really frustrating, Keith, because here we have all this evidence coming out proving the manipulation even more, the manipulation we know that's been going on for a long time, and yet it hasn't really affected the price yet. To add to some of your points there, I even heard that Gary Gensler, before he left as head of the CFTC to go join Hillary Clinton as her campaign finance manager for her presidential run, he even admitted at an investing conference in New York City that gold and silver were heavily manipulated, despite what the CFTC investigation said. He said, we don't have enough money and people and resources to stop the manipulation.
Yeah, I could see that, because, look, these are banks, and they're very sophisticated. They hire some of the best people out of college that write these algorithms that can trade around these markets, and these computers are designed to make money, and they do a really good job, but they forget the rules. When they write these algos, they don't really think of the rules, and these algos are are breaking the rules on a regular basis. And a lot of this stuff is just it's so computerized. And so, someone told me that 90% of the volume in New York is all computerized. Whether that's the same on a COMEX, I'm not exactly sure. But being an ex-trader as I am, I worked for 3 banks in the 80s. I know it's a long time ago, before high frequency trading and before all the things that occur today. But I have a unique background where I witnessed a lot of the trading activity that back then occurred very manually, and it was very easy to spot when we saw it. But today it's almost invisible, because it's happening like at lightning speed, and it's happening millions of times a day. And the regulators just don't simply have the manpower to monitor it, and they likely don't have the sophistication that the banks have.
It's really frustrating, to get admissions like this and still not affect the price. But I think, Keith, that there's real world consequences to manipulation of the silver price. It affects you, First Majestic Silver, and other miners the most by far, because then you can't make sufficient dollars per margin. You're forced to cut costs. You can't reinvest, into new mines or new production. You said earlier in the interview there's very few new silver mines coming online. I think the only new one really is Mag Silver. That's a primary silver mine, and that's because Fresnillo is partnering with them. They're, a massive company. If they were just a junior, they probably wouldn't get the funding. So, I really don't see much new silver production coming online until silver's at least $25 to $30 an ounce.
Yeah, I would agree with that statement. But also don't forget, regarding your comments about the trading and the suppression of the price. The banks don't think they're manipulating the markets. They just think they're protecting their own book. So, when they have a short position or a long position, what have you, they're going to protect their position, and that's what they do. And the traders are paid to protect their employer, and they have these programs in place to do that, and they're very efficient at it, and they don't really look beyond that. It's not that they've gone to a mine in Mexico and seen the fact that when silver was $35 or $40 an ounce, that the mine employed 1,000 people, and the town is bustling, and everyone's happy, and all the families have their kids in school, and everyone's getting educated, everyone's got food on their plate, and so on. And then all of a sudden, silver's $15, and there's only 500 people in town, and families are scrambling for food and to make a living, and they're having challenges of educating their children, and even medicating their children when they get sick, and so on. And if they would go and do such things, they would realize the magnitude of pain that is inflicted upon these communities when the prices of these commodities are suppressed in the way they are.
This is a hypothetical question. One gold mining executive recently told me off the record that he thinks 2/3 of all primary silver miners will be bankrupt in 5 years if the silver price doesn't rise substantially. Now, I know First Majestic Silver is a low-cost producer, but do you think there's going to be really very major consequences if the silver price isn't higher for annual silver supply in the future?
I don't really pay a lot of attention to the other silver companies. I know the bigger ones, Pan American and Coeur and so on. They're generally in decent shape. So, and they got big balance sheets with multi-hundreds of millions of dollars in their bank accounts. So, I don't think they're going anywhere. I think you would need dramatically lower silver prices to start to think about the industry getting shut down or going bankrupt in any way. I think that's a fallacy. The mining sector is very good at moving with prices. I think we've gone through the late '90s and the early 2000s, when silver was trading at $3, $4, $5, and the likes of Coeur d'Alene and Pan American existed during that period of time. And and we were formed in 2002, when silver was $5 an ounce. So I think that the better run companies can have learned and obviously can, and have proven that they can move with prices. So maybe some of them smaller companies that are not as flexible, that don't have their own fleets and they rely on leased equipment and contractors and so on. Yeah, those business models would be under quite a lot of distress in a very extreme low silver price. But look, I think that things have changed. We've come out of a 5-year bear market, and I think it's pretty well proven now that we're back resuming a new bull market, and in my view, I think we're in the first inning of the next bull market, which is going to be quite exciting as far as I'm concerned. I'm looking at where we started, in 2002, at silver at $5 and hitting $50 an ounce, which I predicted, not the timeline, but I predicted the price, and that happened in April of 2011. So it took about 9 years for silver to get from 5 to 50. It went all the way down to 1330. Its low is now today about 17.5, 1760. So let's say you start at, just pick a number, $14 for easy math, and you have a 10 times move, that's $140 silver. If we have a similar kind of run that we did over the 10-year bull market from 2002 to 2012. And I think that's what we're going to see over the next 3 to 5 years.
Yeah, you told me before the interview started that sentiment for institutions looking at primary silver miners and silver in general has improved. So there's a divergence there definitely between what I hear from retail investors who listen to my podcast.
Yeah, I think we kind of touched on a little bit earlier. The retail guys have really been hit hard. We get phone calls from people, First Majestic, or even First Mining. Calls are on a regular basis from people that bought the stock at $20 or bought First Mining at $1.20, $1.30, and then they go, "What happened? Why is the stock 50% lower?" And then should we sell? And then of course we can't give financial advice to people calling in, but that's what people think. When the stock is down by a certain amount, in this case 50%. People think, "Oh my God, something must be wrong," and they are inclined to sell rather than averaging down and buying more. And it's just a phenomenon that occurs, I think, not just in mining. It occurs in the psyche of investors.
Yeah, I completely agree. Yeah, people rely on their emotions, and then when the stock drops that much, fear takes over rather than greed. Greed is chasing prices that are going up, 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 and up, and fear is when prices are going down, panic selling.
Mm-hmm. Yeah.
Well, Keith, I want to thank you again for your time. You mentioned selling silver at $5 an ounce. I don't think most silver miners could find a good grade silver to produce and make a profit at $5 an ounce silver. If you know of any, can you tell me which ones?
Well, let's hope we never get back to those prices. I think that's long behind us. And I was looking at an interesting chart yesterday. It was data from one of the U.S. banks, and it showed gold. I would love to see it on silver, but this is in gold's case. In all currency over the last 20-year period, and every year on a combined basis, and every currency is a little bit different, but there was only 4 years out of the last 20 years that gold was actually down on a currency basis on average over that period of time. So it's pretty neat. And if I find that chart, I should look for it and send it to you, because I was actually quite surprised with it. It just goes to show you that you really need gold as part of your portfolio, and of course silver, just to kind of level out the volatilities in the stock market.
Yeah, gold has been doing well in all the currencies except for really the U.S. dollar for years now.
Yeah, exactly.
But Keith, I really appreciate your time and your insights into the mining industry, and hopefully we can have you on again soon. And I think Keith, going forward, that the new price floor, probably in 2 to 3 years, maybe even sooner, but 2 to 3 years conservative, we're going to have 25 to 30 silver, because you guys are just going to need a much higher price to start bringing on new silver mines, replacing reserves. I know you guys are low-cost producers, but there's a lot of silver miners out there that are not producing at under 13 an ounce, and I think that's going to have to be the new price floor for silver in the near future.
Yeah, no, I think so, and I think it could happen much quicker. When market sentiment changes, we all know it changes pretty darn quickly. The thing is, you got to, and this is the hardest thing to do, is invest before the big move. You can, you pick the good companies. Don't put all your money in one company. Spread your money out over 5 to 10. Decently, we're very well run businesses run by management that knows what they're doing, have built successful companies in the past with good assets in a good geopolitical environment, and you spread your money out around those particular companies of your choice, and you have to wait it out. And you may wait a year, you may wait 2 years, but when things change, these mining stocks, we saw it in 2016. We see what happens. These things can go up 300-400%, 500% in some cases, and that's when it really gets exciting. But try not to chase these markets. Try not to chase really any market. Quite honestly, I wouldn't be buying Apple right now, for that exact reason.
Yeah, I agree. And in a 2 to 3 year period, people who bought during the 2008 financial crisis or a little after, before the central bank started to reflate asset prices and gold and silver spiked, you could have made, easily a couple 100% in mining stocks over a 2 to 3 year period. I made 500 to 600% on some mining stock investments like Great Panther Silver, New Gold, First Majestic Silver, and others.
Yeah, it can happen quite easily, but it all comes down to patience. Of course, where you buy. Where you buy is very important. Obviously, in the case of First Majestic, it was a mistake buying it at $20 last summer, and look what happened. Probably last summer, I probably wouldn't have told you about it because I would have never predicted silver would have gone from 21 back to 15 again. But that's what happened. So. A stock like First Majestic, when so much of its revenue is based on silver. It's a pure silver company in the world. So of course, when silver moves, that stock is like gold on steroids.
Excellent. Well, I thank you again, Keith, for your insights, and please tell our listeners how they can follow you. You're on Twitter, right?
Yeah, I'm on Twitter. It's just Keith_Neumeyer, Neumeyer. Look me up. I don't do too many tweets, but now and then, if I find something interesting, I do tweet it out. And of course, First Majestic Silver, the website is simply just firstmajesticsilver.com, and then of course First Majestic Finance, which is doing some pretty interesting drilling right now. There's lots of drill hole data that will be coming out over the next 8 to 12 months. All of the core projects will be drilled this year. And all the resource studies will be updated over the next 12 to 18 months, which I think is going to add a lot of gold to the portfolio, which we're very excited about. So First Mining Finance is just simply firstminingfinance.com website.
Wall Street for Main Street needs your help. YouTube stole $7,200 from Wall Street for Main Street in annualized YouTube AdWords revenues, and they kneecapped our analytics down by more than 80% across the board since September 2016 with their new censorship algorithms to stop the rapid growth of our channel. That was money we could have used to upgrade our website, pay bills, and invest in improving our content and growing our business. Our audience of loyal listeners is all over the globe and so large now that if most or all of our listeners were to commit to donating $1 to $5 each month to our Patreon account, we could easily meet our goal on Patreon. Wall Street for Main Street also accepts one-time donations on our main wallstreetformainstreet.com website. That's WALLSTFORMAINST.com website via PayPal, Gold Money, or Bitcoin. We also accept donations of physical precious metals that can be mailed to us. Thanks to all listeners who have already made a donation, and thanks in advance to any listeners who make a future donation or contribution to the growth, improvement, and success of Wall Street for Main Street.